Yeah, good morning, everyone. So we saw continuation of up move in the US market, mainly which has started with indication of lower inflations and our Fed may not be increasing interest rate by two times in uh, this year. So that is still continuing yesterday as well. Uh, but if we see the Asian market, we are seeing profit booking in the Asian market in most of the markets. Though Japan market was closed yesterday and marginally up, but other most of the other markets are negative. In commodity also, oil is down by around $1 as compared to same time last year, and iron ore more of a flattish, and steel is up by around 0.5%. So more of a indication of sideway trade, but we had seen strong up move yesterday, and that has shown the up move, which can still continue in today's trade as well. So now the trade is more driven by the results and all. We had seen after a good commentary from TCS, IT stock has supported the market. And yesterday, post HDFC result, we had seen the up move happening in the market as well. So it's more driven by the results, and results are likely to be better in this quarter. Now I'll request technical team to take up from.
Yes, thank you, sir. Good morning, all of you. This is Swati. Yesterday, we have seen a very strong rally on the Nifty and the Bank Nifty front. Nifty has made a new high at around 19,700 and above levels and maintained a closing near the day's high, which is a very positive sign on the technical front. Going ahead, this rally is likely to continue. Yesterday, as I specified, key downside, it has a very strong support of 90,300 levels, which the Nifty has took multiple of times, and we have seen a reversal from the support levels. Now going ahead, 17,800 levels can be tested. About at level 20,000 levels are open on the Nifty front. Whereas on the downside for today intraday purpose, 19,600 will be the immediate support level. If it's break that level, then we are likely to witness some sort of a profit booking, which might take a Nifty towards 19,500 to 400 levels. The overall view will remain a positive as long as Nifty sustains about the mentioned support level. Now coming towards the Bank Nifty, yesterday it was a Bank Nifty who had shown a very strong sign of a reversal from the day's low towards 44,780 and made a high of 45,588 levels. Now we believe that this rally is likely to be continue, and which might take a Bank Nifty toward its all-time high, which comes to at around 45,747 levels. So we believe that this momentum is likely to be carried forward for the coming few trading sessions. Now, as I said, the first important resistance will be at around 45,770 levels. Any move above that level, we expect further momentum to be carried forward towards 45,900 and 46,150 levels. Whereas on downside, as of now, the immediate support is placed at 45,200, which is the swing support level. So one can hold the long positions as long as Bank Nifty also trades above the 45,000 psychological mark. Now coming towards the Fin Nifty, for today intraday purpose, 20,440, 20,550 are the resistance level. Whereas on downside, the immediate support is placed at 20,110 and 19,900 levels. So these are the important support and resistance level for the Nifty, Bank Nifty, and the Fin Nifty. Now coming towards the stock specific, East Indian order really looks very good on the technical front. Yesterday we have initiated by a buy call on this particular stock. The volumes are really doing very well. The stock has given the breakout of the cluster resistance, which comes to at around 218 levels. So we believe that this positive momentum is likely to be seen into this stock, which might take a stocks towards to 230 to 235 levels. One can create a long position at the current market price. Stop loss can be kept at 211. That's it from my end. I request Amit to take a call forward.
Yeah, thank you. Good morning, everyone. So, on the derivatives front, as we are seeing that the Nifty has given a major breakout. So, while in the previous week we have seen that at 19,500 and 600 strike major corridor positions got added up on monthly basis. Those positions we have seen that in yesterday's session once Nifty broke above 19,600 level, major shots got covered and got shifted on the upside towards 19,900 and 20,000 mark. While on the monthly basis, we are seeing that at 19,800 is facing a resistance zone. Currently, as we are seeing that on the downside, 19,600 almost around on the monthly basis, around 16 million position of 19,600 put is there. So support will be at 19,600 level, while PCR closed at 1.54 level. So if Nifty comes around 19,800 level, and at that point of time, if PCR is would be around 1.65 to 1.68 level, then we might witness some profit booking near 19,800 level. At that point of time, PCR will again drag down from 1.68 to 1.20 levels. So keep watch in this zone and keep watch of these levels. While India VIX, we are seeing that a continuous trading in the range. So India VIX is right now on the buyer's front because we are seeing that if it goes above 13.5 level, then only volatility might be witnessed. But till that point of time, we might see some buying strength to be continued in the market. Well, on the stock specific front, we are seeing that the banking finance counter looks positive. We have seen that in yesterday's session, once the HDFC Bank result came after that, major banking counters has shown some major strength from the PSU and private sector. Both counters, we are seeing that the breakout has been witnessed from the specific stocks. So, while selective stocks which we will see buying in today's session would be RBL Bank, ICICI Bank, looks positive in today's trading session, while other counter which looks positive would be Ashok Leyland and Gujarat Gas. So keep watch on these four counter. That's in a direct front. Thank you.
Good morning. Ashok Leyland has won major orders for defense vehicle valued at 800 crores, which includes field artillery tractors and gun towing vehicles. This is marginally positive. On the result side, HDFC Bank result was in line with expectation as higher operating expense was offset by stable NIM and credit cost and also normalization of treasury income. Stable NIMs was a slight surprise as the increase in cost of funds was offset by higher yields. All metrics were stable with ROA remaining above the 2% mark. Bank has guided that it will grow advances at 17 to 18% for the combined entity. Due to the merger, the bank will have to grow its deposits at a faster pace than its advances. And we are confident that it will be able to do so on the back of more than increasing cost of deposits. It is focusing more on expanding its branch network, which is already at 8,000 branches and expected to continue to grow at a rapid pace. So we remain positive on HDFC Bank. Karur Vysya Bank result is above expectation. Slippage remained low at less than 1%, 0.9. In last 5 quarter average, if we see, the slippage ratio stabilized at around 1% mark. This will give investors confidence. Net interest margin has declined 18 basis points this quarter, but they have remained above the 4% mark. And management is confident of that NIM will prevail at around 4% going forward. Also, this quarter they were at 4.19%. GNPA also declined from 2.3 to 2%. Credit cost declined to 1% against more than 1.5% witnessed in last few quarters. So decline. Despite of the decline in NIM, the credit cost has given support, and that is also expected to remain at lower levels at around 1%. And this is why the ROA has been maintained at 1.5% for second consecutive quarter, which also gives us confidence. So stock is trading at 0.9 times FY25 book value. We think re-rating in the stock can take it to 1.3 times or giving a target of 175 within a year. So we are positive on Karur Vysya. Thank you.
Good morning. Infosys has inked an agreement with one of its existing clients to provide AI and automation-led development, modernization, and maintenance services. The deal is valued at $2 billion for the next 5 years. Outlook, this is positive for the company. ATI Mindtree had posted its result yesterday, and the company had posted marginally below expectation set of numbers for the quarter. Order inflow for the quarter came in at $1.4 billion, which is up 16.9% year on year and 4.9% QOQ. CCQOQ revenue growth came in at 0.1%. EBIT margin expanded by 30 bips QOQ and came in at 16.7%. Delayed decision making, which was expected to slow down growth for Q1, did happen and still continuing. Double-digit growth in CC term guided earlier for FY 22-24 is at risk, but order booking and pipeline continue to remain strong. On margin front, management continue to aspire to reach to 17 to 18% EBIT margin as exit rate. Wage hike will happen in Q2. Outlook is neutral. Just Dial had its call yesterday, wherein management aspired to grow the business by 20 to 25%, wherein growth will be supported by mix of paid campaigns and realizations. Company reported adjusted EBITDA margin of 14.9% in Q1 FY24, and management expects to take it to pre-COVID level of 25% by the end of FY24. Company will benefit from higher revenue growth and leveraging costs. Increments are due for the quarter, which will happen in Q3. We remain positive on the company. Thank you.
Good morning. Yesterday, CCL Products had hosted the con call. The key highlights on the con call as the company on the capex side, the total capacity will be 77,000 metric tons per annum, which will include the spray dried and freeze dried. So this will be at the group level. The overall capex will be at 800 crore, of which 600 crore to be spent in FY24, and the utilization is at 85 to 90%. And it has achieved 50% utilization in its Vietnam capacity. As on date, the company's overall term loan and the working capital is at 950 crore, and the average interest rates is at 6%. However, the management is indicated higher debt on the books of around 2,000 crore as on March 25, which expected to dent its profitability. During the quarter, the volume growth remained at 18 to 20%, and rise in coffee prices have impacted the overall operating margins. However, the EBITDA per kg remained intact. The lower the coffee prices, it will improve the operating margins in the near future. So in the medium term, it aims at achieving 18 to 20% volume growth, and the growth visibility is coming from the strong order book from both freeze dried and the spray dried coffee. The stock is trading at 28.9 times to FY24 EPS, and currently we are neutral on the stock. Rallis India Limited has hosted the con call yesterday. The overall top line degrew by 9%. So this was largely due to the industry challenges faced by all the chemical industries due to decline in prices and the contracted global demand destocking. So the company is positive on its few products, pendimethalin, the PEKK. The pendimethalin product has secured the technical equivalence where it is positive, and also it has secured the suppliers for raw materials. Also, revival in PEKK is being observed, where the team is continue to engage overseas customers, and it has signed 3 new contract manufacturing opportunities where it has commenced a product in the last quarter. Also, in the seeds business, it is positive. On the cotton hybrid side, it has witnessed the healthy volume growth. It is facing challenges in the acephate product, where the prices has seen the sharp reduction. The management is focusing on the volume growth, which will be a key growth driver for its overall business, and it aims at new product launches for the business growth in both crop and seed category. So stock is trading at a PE of 23 times to FY24 EPS, and we are neutral on this stock due to the industry challenges prevailed. Thank you.
Yeah, I request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, as we had witnessed profit taking in all the commodities across the counter. Today we are expecting some pullback, so buying is expected in gold around 59,200 to 150, and one can maintain a stop loss of 58,900. On upside, we are looking for 59 450 to 600. Silver also we are looking for 76,000 to 76 100. So buying around 75 400 is recommended with a stop loss of 75,000. And crude oil, there could be some pullback, though prices are expected to consolidate from 6,000 to 6,200. But buying can be initiated if prices are sustaining above 6070 levels. Natural gas also one can initiate a buy with a stop loss of 200, and on upside we are looking for 215 to 217. In metal also there could be some pullback in copper. Prices are expected to test 730 732 on upside, so buying with a strict stop loss of 722 is recommended. And zinc also one can initiate a buy around 214, and maintain a stop loss of 212. On upside, 217 to 18 is the area we are looking to take profit. And aluminum also looks attractive, so buying is recommended with a stop loss of 197. And one can expect prices to test 202 on upside. So that's it from me. I'll ask Utkarsh to take the call forward.
Yeah, thank you, sir. Very good morning, all of you. In USD and we are expecting some more downside. So if we get any pullback around 82.07 to 82.10 double one level, 82.11 level, one can initiate a short position with a stop loss of 82.22 for the target of 82.81.90 and 81.80 levels. In Euro INR, one can initiate a long positions in the range of 92.26 to 92.14 levels with a strict stop loss of 91.93 levels for the target of 92.45 and 92.68 levels. In JPP INR, if prices are sustaining above 59.45 levels, the one can initiate a long positions with a strict stop loss of 59.12 for the target of 59.70 levels. Thank you.